Okay. Welcome, everybody. Thank you. Welcome, everybody, to the launch of the UK Forest Market Report 2022, produced by Tilhill and Goldcrest Land and Forestry Group. My name is Gavin Adkins, and I'm the Managing Director for Tilhill. And I'd like to extend a warm welcome to everybody who's joined us in the room today and those who are joining by live stream. We are at the heart of conservation here today at our venue, the London Wetland Trust. It's a perfect fit with the nature-based themes of the presentations you are about to hear. We have 4 speakers for you today. Firstly, we have Xander Mahoney. Xander is Tilhill's Head of Forestry Investment, and he will bring you a view of the forestry market over the last 12 months by presenting this year's findings in the UK's Forest Market Report, now in its 24th year. We believe it is the most comprehensive publicly available record of forestry transactions in the UK. After that, Xander will be handing over to Fenning Wellstead, a founding partner of Goldcrest, who will bring us an overview of the forestry values and a seller's perspective on forestry investment. Following on from Fenning is our first guest speaker today, Robert Guest. Robert is the Managing Director and co-lead at Foresight Sustainable Forestry. And our final speaker today is Dr. Becky Wildbohr, Chief Science Officer at NatCap Research. At the end of the presentations, we will be holding a question and answer session. This is your chance to ask our panelists your questions. We will also be including questions from our live stream audience. So when the time comes, I hope you'll enjoy making the most of this opportunity. You'll hear this morning how investors aiming for net zero through timber assets are influencing commercial forestry values, and that land available for natural capital projects, including native afforestation, peatland restoration, and rewilding, has also trebled over the past year. The wider benefits of trees and woodlands to our society, along with the other nature-based solutions, are now at the forefront in the fight against climate change, and as such, are being ever increasingly recognised. I would now like to hand over to Xander to reveal the full findings of our forest market analysis and how the investment market is being influenced. Xander is an investment professional, first at a global emerging market hedge fund in London, and then moving to the US to specialise in early-stage technology investments in Silicon Valley before he joined us at Tilhill. He now heads up our forestry investment team. The team provides investment consultancy across the UK, working with funds, individuals and institutions to acquire forests and land for afforestation. Over to Xander.
All right, thank you very much for that, Gavin. Everyone can hear me okay? Good. This is actually a really good mic. I can't hear myself for once. I was going to start by introducing myself, but Gavin's kind of stolen my thunder on that, so let's hope that doesn't ruin my flow too much. So the headline here, another year of forestry gains. I think we're probably all on board with that in the room, but I wanted to kick off with a little chat about methodology. And so I've italicized 2 words here: transactions and observed. So with the Forest Market Report, we look at transactions, and we do that because we believe you can have a pretty good crack at modeling a forest with a spreadsheet and figuring out the costs and the incomes. But in order to know what the capital value of the forest is, what it's actually worth, you kind of need to see it change hands in an arm's length deal. And so we think the most interesting data is the transactions. And I say observed because there's plenty of people in this room who like to keep their deals away from the prying eyes and, more importantly, the fees of we agents. But we can only really report data on the transactions that we actually see. The challenge is this leaves us open to what I've termed mix shift there. And that's when the basket of assets is different from one year to the next. Some year we're dealing more with Rolls-Royce forests, and other years we're dealing more with, well, I mean, I won't insult anybody's make of car. I'm not driving a Rolls-Royce, at least not yet anyway. But also, some of the stragglers from 2021 suggest that the data from last year might actually have been even stronger than what we presented. So the summary, though, the next 2 points, the market size is static in terms of value, but the area has gone down a bit, and that means valuations have continued to grow. So diving into this now, we've got 200 million plus there for the market size for commercial forestry, and that's because we've seen about 200 million pounds worth of transactions, and we're well aware of transactions happening outside of that. But the actual area traded is down quite significantly, and this is actually the smallest area traded since 2008. And as Gavin noted, I wasn't in forestry then, but I was in the financial markets. And my understanding of how things were going then suggests to me that was probably a demand-limited year. But here, it really is supply. And it's also worth noting that market value that we're seeing here of the last 3 years of 200 million pounds trading, that's 10 times what we saw in the early 2000s. And that's driven by people and institutions with a lot of buying power that doesn't seem to be changing anytime soon. So the valuations here, this is where I wanted to talk about this mix shift, because obviously the headlines show spectacular rises, but we kind of drilled down into the data a bit more because we didn't feel that was necessarily exactly what we'd seen in the market. And now, if I could kind of draw you guys a bar chart of where all of these valuations turned out, the range hasn't changed. We've not had a big shift in the range of where the assets were priced. Most assets are still in about the same range as they were last year. Yes, we've had a few large, expensive outliers at the top side, but really what there was just an absence of stuff changing hands cheaply. And that has impacted the average. And so I thought, well, there's probably just a bunch of old deals in there that got held up by COVID and are being done at old prices. But that wasn't actually the case. And so it's difficult to say exactly what's happened there, and we'll probably only know in the coming years what the change has been. But it is possible that some of those deals last year were done at old prices because people hadn't kept up with the speed at which the market was changing. But we kind of have, between ourselves, come to this idea that a more like-for-like change in value of the year is probably about plus 15%, and that's a number that we're comfortable with. And there's absolutely no surprises in what was getting the best prices. It was the large stuff, the high-yield stuff, and things in good locations. So planting land, we've deployed a lot more assets in our market monitoring function for planting land this year so that we could see a lot more opportunities. But we've also got a lot stricter about defining what is an opportunity to plant a new commercial forest, because it's hard. I often liken it to building houses. Everybody wants more houses, but no one wants them in any particular place. And the net result of that has actually been to see more market value, but again, a smaller supply of area. And my sense is this is because we have a land-constrained country, and we obviously believe the most efficient way to produce timber is to plant commercial conifer, but we don't have any kind of overarching land policy in the UK. And we often hear the kind of right tree, right place. And I sometimes worry that's used to say, well, no, that means no non-native trees anywhere. But with all of this land-based stuff, the bulk of these deals are off-market. So this again is what we've managed to observe. Prices have been driven by big numbers being paid for large-scale deals in Scotland and the tight supply that I've mentioned. And the fact that we're a country that imports the majority of its timber and also has huge afforestation potential is not lost on people. And that opportunity is being increasingly spotted, not just domestically, but also internationally. And if we want to solve this problem of having a lack of commercial forests to sell to people and to have, then as hard as it might be, we've got to plant new ones. I'm not going to say a huge amount about mixed woodlands, but the market has been strong, and growing. It's a market dominated by England. And I will just call out Old Park Wood, which at the time of going to press, we were under the impression was a done deal, but it's apparently such an attractive asset that the seller doesn't appear to want to let it go. Natural capital, this is a new segment for us, and after a lot of debates, we've defined it quite broadly as land that's not croppable, so you couldn't use it for direct food supply, but also not suitable for commercial timber. And that actually yields quite a lot of opportunities. But they're in different stages of development in terms of the business model, the payback for an investor. And I think we're getting quite comfortable with carbon from afforestation. And peatland restoration, we understand it's happening, we see the model. Biodiversity net gain and rewilding, I've not put them together because they're the same thing, but rather because as yet the financial payback for an investor is less clear. There's a couple of things I'd like to say about this credit-based model. One is it's not a recurring income stream. You get your credits, it happens once, and unlike timber, there's not this second rotation of it. And the values of the credits are uncertain, and that's potentially a positive. You know, volatility can go, these could be the next COVID vaccine and be worth multiples of what they're worth now, but it can also go both ways. And then finally, this idea of, well, once you've had your credits, and you've sold them or you've used them as offsets, what are you left with? Well, you're left with something that has a lot of amenity value, a little bit like a mixed woodland, and I'll come back to that in just a moment. So a few headlines about the different countries, and Scotland just dominates. It dominates in commercial forestry, it dominates in large-scale planting land opportunities. England dominates that mixed woodland market, but it is a smaller market. But something interesting about England is it's very challenging to do commercial forestry, and this is where your amenity value is highest. So there could be a really interesting opportunity for natural capital here in England. Wales has a unique opportunity for doing commercial timber and also getting carbon credits, which has got more challenging with some changes made by the Woodland Carbon Code this year. But there's a feeling amongst Welsh farmers that their way of life is going to disappear because of afforestation, and people go to war to stop ways of life disappearing. So I think we do need to be sensitive with that and figure out how we share that value and how we express the fact that at the current rate it would take us centuries to plant up all the farms in the country. So there probably doesn't need to be as much worry as what's happening on the ground. So the summary, as I started with, another year of forestry gains. I think that's clear. But we're now in an economic climate with huge amounts of uncertainty. And so I'm going to channel my inner Jeff Bezos, if there is one, because when he started Amazon, he said, well, I can't tell you what's going to change, but I can tell you some things that aren't going to change. And he said people are going to want their goods conveniently and at low prices. And he's built an empire out of that. And so I think that's interesting in our space right now, because what's not going to change for us? Well, we're still going to be decarbonizing everything because we're all toast otherwise. And that's going to mean not just picking the cheapest product or supplier, but rather the one that's the best value given its carbon footprint. And we're probably going to think about onshoring strategic resources after the disruptions we've seen from COVID and what's happening also in Ukraine. And the globalization process has driven down prices. I don't know whether you want to call it the post-war period or the rise of China period, but that's been a long theme that we might be starting to reverse a little bit. And both of those two things, decarbonization and deglobalization, have a potential to put upward pressure on prices beyond the current cost of living climate. And so who benefits from that? Well, timber plays into those three themes perfectly. And I think it would be remiss to mention that fairly clearly so does clean energy. But what it says to me is that what we want to do is keep going. Thank you.
Okay, thank you, Sander. Now I'd like to introduce you to our second speaker, Fenning Wellstead, who is a founding partner of Goldcrest Land and Forestry Group. Fenning is a fellow of the Institute of Chartered Foresters and a past president. He is also a fellow of the Royal Institute of Chartered Surveyors and a registered valuer. After 38 years in the forest industry, Fenning became a founding partner at Goldcrest. Fenning is focused on valuations, cash flows and strategic assessments for clients, blending objectives to enhance the value for owners and stakeholders in the short and longer term. Fenning will now give us a presentation of the overview of the forestry values and a seller's perspective.
Thank you, Gavin. After that introduction, I'm sorry I'm not going to talk much about money at all. The first thing I'm going to start with is a picture of a loch, or a lake, if you like to be in England, which I regard as natural capital. That happens to be Glasgow's water supply. I'm going to take you back to 1850 when Glasgow had outbreaks of cholera. Really, it was up against a brick wall of no room for expansion, no water to keep going, and by Act of Parliament developed this reservoir. It's 26 miles away, and the water flows from there to Glasgow, dropping 22 feet in the process. No pumps required. 160 years later, it's still working. That I would regard as sustainable. The same thing, of course, was done in Manchester with Thirlmere Forest in the Lake District, and for Liverpool at Lake Vyrnwy. And this directly led to the expansion of the industrial era. 20 years later, we had the internal combustion engine beginning its march. 30 or 40 years later, the first antibiotics appeared, although they didn't really make an impact until the 40s and 50s. But where are we going? We've managed to stop smallpox in its tracks. We've managed to kill off a pandemic, virtually, almost. So in some ways, we've managed to take control of nature, but really only in ways that protect us as individuals. We haven't really done anything to protect nature yet. And of course, the dawning realization that brings us all here is that we need to make sure nature survives itself. And of course, one of the other things the industrial era has meant is that we're working on materialism. We've developed a market which is based on producing things and selling them and making a profit. And we've actually reached the point now where we make things simply to make them. In other words, we consume to keep production. That's what the fashion industry is all about. We make clothes because we've persuaded you all to buy a different coloured t-shirt this year. And it keeps the factory going. But this really is unsustainable. And what's different now is we don't have an obvious Loch Katrine or Lake Vyrnwy to go to for the next environmental break, if you like. And because the population is now 8 times what it was over that 160 years, we've become slightly disconnected. And we all like to think we have nice values and we're reasonable people. But the reason there's a dog walker's van there is, I think that's a very obvious demonstration of one of the issues we have in the current world, is how we all fall over each other and get in the way of what anyone else is trying to do. So I have a new planting scheme in the borders where the design involves wetlands for curlews. So this is set aside for the curlews, perfect. But we've got a new road into the forest. So people come and park there and walk their dogs. Some of them come with 10 dogs at a time because they're running a small business. Well, the curlews now have less chance of surviving, having been designed their own space, than they had before. So the consequences of what we're doing seem to me to be becoming increasingly complicated. And government can't do much about this. You might have read here in Dartmoor they're proposing to legislate against barbecues and dogs off the lead. How the heck is that going to be policed? It requires a change in public behaviour, it requires a change in education, and I think we also need to work out what we don't do as much as what we do. So all of this comes back to land, and thank you, Xander, for your comments on land and the market, but everything we're doing requires land. whether it's the unintended thought that suddenly we could put wind farms on the top of the land we couldn't plant and suddenly it becomes a real money splitter. It's the ownership of that fundamental asset that's key. And we still import a huge amount of timber. Where's that going to be grown? And we need to have balanced land use. So yes, we have Welsh farmers who are resisting change. We had the same to a degree in Scotland. But some of the wiser farmers suddenly realized that this was impinging massively on the value of their future pension fund, because if they didn't sell it for forestry, they were selling it to farming at much less money. And let's just go back to what we're growing. We're growing commercial timber like this because it's easy to harvest, it's predictable in its yield, and on its time scales with variations. You can grow it for a bit longer or a bit less. But we're criticized because the forest floor is a bit barren. But if we go into farming, the farming floor is barren because these objectives are to grow a fundamental product which we need every day of the week. Why are we doing that? That's the one I want. Just a selection of everyday things, all of which we need in order to eat, to package what we're eating, to read. The table itself is a lump of wood. The chair at the back's covered in leather, which required grass to feed the cow that made the leather. It all comes from land. And it all comes from land managed with the objective of making some form of profit, but certainly sustainable in the modern economic sense. A few years ago, I put up a chart showing how interest rates had dropped, and it was a beautifully smooth curve, and the land value was a beautifully smooth curve going the other way. And it still looks a bit like that. What we've seen in the last short while is interest rates ticking up, and that is going to make a change. I've only shown land values up to £9,000 a hectare, and I know that people in this room will say that's a bit short because we've seen land changing hands for forestry at more than double that. But the key question to me is what's happening with interest rates and yield. Will that change things? And I'm not sure it will in any big way. We might see a bit of a softening, but rather, as Xander was saying, there's so much money and attention now focused on ESG and carbon and general well-being of nature that I think there's more than enough money looking to get into this market, and therefore it will be sustainable. And the great thing about land is it doesn't disappear. You can invest in a .com company or FTX and you haven't got much left at the end of it. So what's actually happening in the forest to perhaps look at natural capital? This is a bit of commercial harvesting. In the background you can see a crop that was replanted 5 or 6 years ago, wall-to-wall Sitka, improved stock. But this site has revealed a pond. And just to show the passage of time, when this forest was originally planted in the early 80s, the Forestry Grant Scheme was basically a blank map which you hatched and said, we'll plant everything in the hatched area. And if you didn't plant everything, you didn't get the grant. So you did, and the pond just gets buried. And we're now releasing that. The ground's going to go back as native woodland. It is actually a private water supply. We have seen otters, we have pine martens and other species here, and all of that will boost the diversity of the forest. The improved Sitka that's been replanted in the foreground will mean that overall yield will not drop, yield of timber. But just coming on to natural capital, here's what you might call wetlands. It's convenient that we're in the wetland centre. That's been developed as part of a forest because it's clearly land that wouldn't support growing trees. There are beavers in the area. They're going to find this shortly. The willow that's growing on the islands will get a little bit larger and eventually form a food source for these animals. How is this all going to be managed? Just down the road there's farming, whose drains will get blocked. How is all of this land use going to be managed? That's one of the big questions. I've got a couple of Highland slides here which I might skip past because the Highlands is not really this audience, but you've got plenty of land like this in England, overgrazed for 200 or 300 years. We can plant trees in it, but unless we work out how to control the browsing animals, these forests are a one-off shot because the deer and other browsers will stop it regenerating in its own way. Just to bring it down to perhaps something that more of you see down here, a nice stand of oak, seed quality. It's now about 100 years old, developing some very good timber, but there's no understory. There are no young trees at all because of these guys. And down here it could be muntjac or Chinese water deer. If we remove them from the equation, in this instance by fencing, in 5 or 6 years we have the next generation already in place at only the cost of the fencing. But once again, the fencing doesn't last forever. The long-term solution must be controlling browsing animals. And of course, the other thing you get with a deer fence in a lowland setting is lots of walkers who get in the way of shooting deer, and lots of dogs who upset some of the wildlife you thought you were trying to encourage. Carbon contracts. Xander was talking about the carbon markets. We've had to look at a number of properties planted for carbon. This is 3 or 4 years old, birch, trying to come out of a tube and still being nibbled. Now, I would question whether this will pass its verification for its first vintage. And what does that mean? If you lose it, you potentially become deregistered. I would rather look at it on a positive way and think that carbon has a very strong opportunity to make broadleaf woodland management successful. They take more looking after than conifers, and I think we should see much better land management of broadleaf woodlands as a result. Just to look at the planting profile, we're supposed to be, according to government targets, getting to 25 to 30,000 hectares per annum, which we were achieving in the 80s. And at the moment, we're running along at about 13 to 14,000. This is the latest figures. Scotland's managing 78% of its target. Interestingly, overarching this, the Scottish Government has a target to double forestry cover in Scotland, but at this rate, it'll take 100 years to get there. So we're not really getting on with the game. And one of the issues with all of this, of course, is securing not only the ownership of the land, but the permission. And one of the difficulties, particularly it seems in England and Wales, is securing that position. And how are we going to improve those problems? In Scotland, we had the McKinnon report, which cleared away a lot of the objectives. Do we need a similar one in England and Wales? And finally, just to come back to timber, this is what we're growing. The commercial forests that we reported on are by and large growing this product, which is feeding in as raw material for housing, for pallets, packaging, chipboard, and a whole range of new products with nanotechnology, clothing, and so forth. Along the way, we can incorporate a wide range of other objectives, particularly wildlife, diversity, and so forth, and are very happy to do so. As we'll learn shortly from Robert and Becky, many of these things may attract a financial value. How is that to be valued? How is it to be put in place against timber and land? Because we're creating different asset values here. If you start separating them out, if I sell my carbon rights, what does that do to my land value? I've potentially got a liability now to supply the carbon rights to the person I sold them to. And potentially I've got a liability to keep my wildlife species going because I've sold the ticket that came with that. And you have to be very careful what you do to the value. But there's a massive future for forestry, and we need to be aware that these values come with a potential risk, and it's a developing market, but it's a very strong future. Thank you.
Thank you, Fanning. I'd like to introduce you to our first guest speaker, Robert Guest, Managing Director and Co-Lead at Foresight Sustainable Forestry. Robert co-founded Foresight's Natural Capital and Forestry Division and launched the Foresight Sustainable Forestry Company. Robert has over 15 years' experience in finance and investment and focuses on sustainable real estate and infrastructure, and is passionate about the key role that sustainable investment and responsible ownership and management has to play in the future of our planet. Robert will present to us today on the subject entitled Sustainable Land Use, Natural Capital Alpha. You will also be able to read his article when you get a copy of the UK Forest Market Report later. Over to you, Robert.
Good morning, everyone. Firstly, thank you to Goldcrest and Tilhill for having me. It's a real pleasure to be here speaking today. So I'm just going to start by saying that Foresight Sustainable Forestry is primarily a timber fund. We're really proud to be supplying more timber into the UK economy. That's the beating heart of what we do. But around that, we also have other things that we're looking at Foresight, so voluntary carbon, biodiversity, natural capital. And so I'm asking the question today, if we use our land sustainably, can we generate a natural capital alpha return? So a really basic picture on the screen there, just to get people into something, a simple way of looking at it. So our stocks of natural capital, biodiversity, our environment. I think what we're trying to do with natural capital, and using that phrase, is convert our stocks into ecosystem services and abiotic services and flow these towards society and businesses who can generate value from that. So it's just a simple concept, but I just wanted to kind of get people into the mood. Slightly more complicated diagram there, but actually quite simple when you break it down. So on the left, we've got our 4 realms: land, fresh water, ocean, and the atmosphere. And within those realms, we've got different biomes which overlap with each other. And those form our environmental assets. And so if we look at the services, generally breaking this down, this is a UN chart, I think, and we're breaking down the services into 3 component parts. So provisioning services, cultural services, and then also regulating and maintenance services. So just contextualizing that, when we look at a commercial forest, the provisioning service might be sustainable timber supply. The cultural service might be Fennings dog walkers or other people who are coming to use the forest for education purposes or recreation, getting in the outdoors. And then regulating, really important for net zero, so carbon sequestration, using forests as a carbon sink while producing more sustainable timber as one of your provisioning services. Regulating water attenuation, flood protection. We're using the environment to regulate things that we need as consumers and as businesses and society. So just looking at it from a kind of financial investment perspective there, got 3 sort of verticals. The FCA and others are redefining sustainable and impact at the moment, but just looking at it on the left, the traditional approach, we want to have a financial return, and we analyse the financial risk profile of things. And typically, if you were moving towards the right for sustainable and impact investing, unless you were a philanthropic investor who didn't want a financial return, your sole purpose was to deliver something different, the cost of capital would go up the more you move on the transition pathway to the right. And the reason for the cost of capital going up is you see development risk, capex, investment, new market uncertainty, volatility of those cash flows versus what you're used to. And so the traditional approach would see sustainable and impact projects as being more expensive. If you look at the sustainable investment approach and looking back to those other slides before about, if we don't look after our environment, we cannot generate a financial return. So the sustainable approach says, look, one aspect of ESG is to manage our risks so that we can keep generating our return. The other half of that story is to turn it into an opportunity. Actually, these markets could be the next big thing. They could be exciting. And so just thinking about how we reassess the risks and opportunities and returns from land use. So just breaking that down into, again, valuation theory, and I stress this is theory. how people value assets is very different, and there's always emotional aspects of when you're buying things, and you need to think about supply and demand and what's available. But just going back to the theory, your risk-free rate there, your industry beta and your risk premium, well understood corporate finance, capital asset pricing model principles. And in the kind of new approach, and this investment theory is under review at the moment, you might be looking at UK gilts and bonds as your risk-free rate. You might replace that with a green bond rate. And looking at the betas, you might be adjusting those for risk. So transition risk, regulatory risk, social risk. So if we do nothing, that creates risks in our businesses. So either the industry beta, the traditional one, has to get more expensive because it's not managing its risks, or the natural capital beta might be getting cheaper because it does manage those risks better. And again, with the risk premium, you might be adjusting those for the fact that there's a scarcity value of the asset and the synergies you can create in these new businesses. So just pulling all that together to a Foresight Sustainable Forestry view of the world, right at the heart of what we're trying to do, we're trying to deliver a sustainable financial return. And so we have a financial return in the mix, but actually it's the ESG outputs that you can see there, and I won't go through them all, but there are really strong ESG outputs from the forests that we're managing and the new forests that we're planting. And so we're trying to deliver good outcomes, positive natural capital outputs, and ultimately deliver a natural capital alpha from our projects. So just a live project, live example of one of our natural capital focused schemes. We do have timber focused projects and we're very proud of those. But in terms of natural capital alpha, this is one of our stronger examples of how we're thinking about pushing ourselves forwards. So this is a case study for a Scottish estate. It's in Perthshire. It's about 2,160 hectares all told. When we bought it, it was owned by a high net worth who was managing it for sporting and recreation. So game shooting, deer stalking and fishing, entertaining friends and family. A little bit of a letting business, but potentially not maximised on rental incomes. Fantastic hydro scheme, some good commercial forestry, some nice amenity forestry, broadleaf forestry, big sheep farming operation, 800 ewes. And so a lovely piece of land and managed in a certain way. And our natural capital approach, you can see planning to slightly increase the number of FTEs that we're employing. And then using those housing, so we're trying to let some of them. 2 of the houses are rented out to local families. There's a shortage of nice family homes in the area. There's one building that we think might make a great education centre, and then the keeper's still living in the house on site. In terms of developing and building that ecotourism and sporting recreational income, some glamping pods are something that we're thinking about at the moment. The game shooting isn't making financial sense, but we'll continue the sporting heritage of the estate with deer management, stalking and fishing. The hydro is still a great income generator, and then you can see there the ambitious planting project we're planning. So keeping some commercial planting in the design, a big area of broadleaf, and then a natural regen area up on the hill. Trying not to plant too many stems per hectare in the broadleaf areas, mixing up the commercial and making the best of what's there from a natural capital perspective. For grazing, we're planning to replace the sheep farming with regenerative grazing, which will probably be cattle. And then there's peatland and wetland restoration as well. So we're excited about the project, and hopefully that gives you a feel for how we're looking at things in the detail. So just moving on to the regulatory landscape, there's lots of jargon on the left of the slide there. It all starts with the Paris Agreement, and then from a regulatory perspective, Europe is a bit ahead of the UK, but the UK is catching up. But that regulation is flowing down from our commitments from COP26, and governments are flowing that down, and regulators are putting frameworks in place. So just a few headlines there. The US government, the biggest purchaser in the world, has committed to make its supply chain net zero with a science-based target. Deutsche Bank recently a case for alleged greenwashing. So people are being, if you make a commitment, a net zero commitment, people are actually now being sued and said, well, actually, that's not right. You've misled the consumer. You're mis-selling. And so people are being held to order on some of these commitments, which is important. And the EC there, you can see putting in binding targets for nature restoration. So one of the income streams that you saw on the case study, voluntary carbon, that's a massive disruptor in the land space. It creates something else for landowners and land managers to think about. How do I diversify my income streams? And what's driving that is the voluntary carbon market. If you look at the commitment, you can see almost exponential increases in people who've either made a science-based target or committed to make one. I pulled out a stat earlier. It's about, I think that 3,700 figure of number of companies is actually tracking towards 4,000 companies. But the key is that these are not small companies. This isn't the newsagent down the road. These are multinational corporations. And there's a definition of high impact companies. So globally, there are $67 trillion worth of high impact capital in these high impact companies. And so of that, just bear with me while I dig out the stats so I get this right. So these are big consumers, and by market cap and emissions, the 67 trillion. Now, 33 trillion of those companies have made a science-based target or have committed to make a science-based target. And so and in total, those high-impact companies, their emissions equate to the US's emissions plus Europe's emissions. So broadly speaking, half of the US and Europe's emissions have made a science-based target. That's huge. These are big companies and these are serious commitments. And that could create a market for voluntary carbon units. Now, science-based targets are very high integrity, quite difficult actually. You're only allowed to offset the balance of your emissions. That's the last 10%. So you've got to decarbonize within and then you only offset the rest. So these are proper commitments. And at the moment, only removals qualify towards a science-based target for that 10%. Peatland restoration doesn't currently qualify. Additionality, permanence, and all the integrity points, the measuring, the monitoring, all of that's got to work for the integrity to be there. What we're seeing is a spread in the UK. Woodland carbon units are selling between 18 and 35 pounds per tonne. Globally, for other carbon removals or other technologies, we're seeing $6 to $9, and that might be RED Plus protecting the Amazon. So there's a big evolving market, but the demand is there, the commitments are there, and people are being held to order, which creates a good opportunity for landowners if they can do and produce high integrity units. So just finally, I talked about timber. Again, our approach is to diversify the income streams. And timber's, it's a great sustainable product. It's renewable, it's carbon efficient, and commercial forestry can give tangible financial returns for landowners and investors with a relatively low market risk to, say, voluntary carbon. It's evergreen and you get your rotational income coming off that. It's not a one-off income stream. And so generally speaking, Foresight would really encourage people to think about a rewilding project or any natural capital project might want to think about integrating some timber, commercial timber in the mix. It might be commercial broadlease, but we think that's worth bearing in mind when you're designing things. And as others have highlighted, we're a big importer in the UK, and globally the supply is very tight and it cannot keep up with demand. We're supporting jobs when you have that industry. It's a traditional income stream, but it's something that we think shouldn't be forgotten. And it's the best way of delivering these returns for investors is to have some financial return, but also that impact. So just a few takeaways before I sit down. So I was talking about those blending those financial returns. We think for sustainable investment and sustainable land use to scale up massively, that the best way to do that is to prove concept with that blended return, the financial return and the impact together. That's scalable, and investors should come back for more if you can deliver that combination. So if projects can stand on their own 2 feet financially, then we think that those projects have the best chance of delivering for investors. And sort of old saying, it's hard to be green if you're in the red, and we do believe in that. Otherwise you're having to sort of cross-subsidize something way up on balance sheets elsewhere, and we think the project should stand alone, and that's scalable and repeatable. We talked about one-hit wonder income streams and voluntary carbon being a one-off payment. After that 100-year time frame, will there be a standing charge for looking after a biodiverse native woodland project? We don't know. But again, that's why we think the best land use is thinking about actually ecotourism, timber, voluntary carbon and biodiversity units all together and trying to mix it up so that at the end of it all you still have, as Fenning mentioned, a sort of intrinsic tradable land value, and you haven't just skimmed the carbon units and the biodiversity units off the top. Someone else takes the credit for that. And so when we're designing our projects at Foresight, we're trying to think about legacy. We always try and buy land or a piece of land or an estate or a forest and leave it in a better state than when we bought it. It's a long-term game, this, and so we're really keen to just encourage people to do that. From a sustainable land use perspective, we also need a social license, and education of regulators, education of communities about what we're doing and being open about our schemes, communicating clearly and allowing people the time to comment. That's going to be really important for natural capital. It's going to be really important for forestry and afforestation. So just wanted to part on that shot that the social license is going to be really important. Thanks very much, everyone.
Thank you, Robert. Now to our final speaker for today, Dr. Becky Wildball. Becky is Chief Science Officer there and has responsibility for setting the science vision and overseeing the model development. She is a quantitative ecologist with over 10 years' experience at the interface between natural sciences and economics. Becky is highly experienced in working with clients from the public and private sectors, including asset managers, utility companies, charities, national parks, and individual landowners, to understand the investment opportunities in natural capital and biodiversity in a credible and data-driven way. Becky holds a PhD in forest ecology and REDD plus carbon markets from the University of Cambridge, and has carried out research for the University of Oxford and the Royal Botanic Gardens at Kew. Becky will present to us today on the natural capital of UK forests. So, over to you, Becky.
Thank you very much. Good morning, everyone, and thank you for the kind invitation to speak. What a nice introduction. So I'm going to talk about the how, I think. So we've heard today about the why and the what. I'm going to speak about the how, or at least a little bit of feedback, the how much. So how do you quantify how much natural capital you have in your forests? A little bit about who I am. So I work for NatCap Research. We are a data-driven company. We are a group of scientists, effectively. And our vision really is to help landowners, forest owners, people like you to really understand what you have in terms of natural capital, and then make informed decisions about how you can manage that through time, how you can improve on that baseline through time. So what does that look like? So our process, and we've worked with a lot of people across Great Britain since we were formed about 4 years ago, is that we help you to understand, first of all, what do you have? So that involves lots of data gathering. We use a lot of satellite data, aerial photography, your own data as well, and sort of field data. And then we build predictive models on that. So Robert gave a really nice overview of what natural capital is. So it's those stocks of natural assets and then these ecosystem services that flow from those. So what we help you to do is to model those flows of ecosystem services and quantify what is actually being provided by that land. So that helps you to assess where you are now. Really important to start with a baseline. So what do you have currently in terms of natural capital and the services it's providing? And then from there, of course, as Robert was saying, you can value it, you can start to access alternative markets, so outside of timber, these biodiversity net gain markets, carbon markets, and then potentially report on that or monitor it through time. So that's the journey. Now, there are lots of ecosystem services that can flow from forestry assets. We've heard a lot of them today, so amenity value, for example, is a really important one, particularly in Great Britain, but there's also pollination, flood risk reduction, clean water provision, soil erosion prevention, and storage of carbon as well. I don't have enough time to talk you through all of them. I picked two, which I hoped you might find interesting. So one is carbon storage. How do you quantify with accuracy the amount of carbon in a forestry asset? And then biodiversity. How do you quantify how important a forestry asset is for biodiversity? So let's look at carbon first of all. So this is a map that we've created. It's 5-meter resolution, and it looks at every tree in Great Britain. And measures how much carbon is in that. So the data behind this are provided by a company called Blue Sky Limited. This is the national tree map in England and Wales. And what it is, it's based on aerial photography, which is being flown across the country every 2 to 5 years. And it maps out every tree canopy and the height of every tree canopy in the country. And if we combine that with satellite imagery, information about the soil type and the climate, the topography, those kinds of things, we can then build a model of how much carbon is in each of those trees and forests. And we split that out, so we look at carbon within forests, so sort of closed canopy assets, and then we also look at trees outside of forests as well, because of course in traditional forestry we're thinking about closed canopies, but with some of the discussion today around other natural capital, if you're thinking about natural regeneration, you might end up with assets that are more sort of open, at least initially in the first few years. So that's the modelling. That's how you quantify how much carbon is in those assets. That seems a bit nebulous, so let's look at an example. This is Whiteham Woods in Oxfordshire. I tried to choose a publicly available, non-controversial site, because I know how concerned people are when they see their own sites pop up, so this hopefully won't offend anybody. This is, if you know Whiteham Woods, this is a piece of ancient woodland. This is broadleaf woodland in Oxfordshire. The map in the middle is the canopy height data. So you can see this is not a uniform forest by any means. Purple is high, yellow is low. So we're seeing that some of the taller trees are in the centre of the forest, and there's a lot of variation around the edges. You can see much sort of shorter stature trees. These will be the sort of younger trees. And I don't know if you can pick it up, but there are sort of yellow stripes across the site as well, and those are all of the trees in hedgerows as well. So all of that is being picked up. And then on the far right, we're looking at carbon storage. So I've stripped out the trees outside of woodlands just for clarity. But again, you see it's non-uniform. So you can really see not just how much carbon is within your forestry asset, but also the density of that carbon. And that can help you to make decisions, but it can also help you to track the carbon sort of sequestration through time as well. So you can see which elements of that forest asset are doing well for carbon, which perhaps less so, and you can report that to others as well, and the carbon markets. This is just looking at those trees outside of woodlands as well. So you can see they are also there. Interestingly, in England, about 20% of the carbon is actually outside of forests. It's trees outside of forests that store that carbon. Okay, so moving on to biodiversity then. How do we think about biodiversity for forestry assets? Number of different ways of doing this. Actually, interestingly, in Scotland, we were doing an interesting project around Loch Katrine. I know that site really well, developing a biodiversity metric in Scotland. But another approach is to look at connectivity. So where are your forest assets? And are they positioned in a good location that would allow biodiversity to move through a landscape? Alone as an island, a forest is useful, but of limited use. It's really as species move through these landscapes that you start to get more functional landscapes from a biodiversity perspective. So one way to do this is to use modelling. So we look at something called graph theory. It's the same way people think about transport networks. And each forest patch is a node, and then we look at how well connected those nodes are. And on the far right, we can see Whiten Woods again, how important it is. So dark purple, that's high importance at a landscape scale. So we're looking at 100 kilometres by 100 kilometres. And that particular forest patch is very important, both as a habitat in itself, but also as a connector between other forests. And that can help you think about your own forestry and also how to potentially enhance that by connecting up with neighbouring woodlands. So lastly then, this is just looking at biodiversity and carbon, but of course we mentioned there are other ecosystem services that a forest can provide as well. And if you were to quantify all of those in the same way, so spatially explicit, nice fine resolution, you can then stack all of those together and you can look at within that woodland, again, what is the total service that it's providing, and also which parts of that asset are providing the most service. So actually, this is stacked up looking at recreation, water, flow and flood risk, carbon, biodiversity, pollination, recreation, all of the little fine scale pathways that you can see are actually pathways, so those are the footpaths that run through the forest, for example. I want to say a little bit about who uses this kind of information. So we're a TNFD data catalyst partner, so helping to align our data or these kinds of data sets with reporting frameworks. And we work with a wide range of estates and asset providers, asset owners around the country, also water and utilities, and the government as well. I'll just say one more thing I think about what you would do with that information then. So we're starting with the baseline, what you have now, but of course, in this hotspot map, you can also see which areas are low in particular services, and that is your next step to think about what are your opportunities for enhancement. So what do you have now, but also what could you do in future to enhance those, and what is exactly how much of a benefit would you have if you were to make certain interventions? So I think I will leave it there.
Thank you very much, Becky. Now, I'd like to invite all of the speakers back to the table in the front here. We're going to start our Q&A session. If you're asking a question in person, please raise your hand and wait for the microphone. That will allow the people on the live stream also to hear the questions that you are posing to the panel. So I'd like to open it up to the floor. Emma, if we could have the microphone down here, please. Thank you.
This is on, yeah. My name is Darius Sasha. I work for SLM. We're a specialist ag and forestry asset management firm. I have a question for, was it Robert? So a lot of illiquid assets like forestry, when they're in a listed vehicle, tend to trade at a discount to their value, their net asset value. I just wanted to ask you what your experience has been, the Foresight experience has been with that.
Yes, so it's our first year, coming up the anniversary pretty much next week, I think. But so harking back to the IPO, thinking stressful times. But yeah, we've traded for a early period where we didn't have any assets and we had a lot of capital at a discount to NAV. But I think as we started to execute the business plan throughout the year, buy the assets and start developing the afforestation sites, we've traded at a premium. After the mini budget, we traded at a premium. So in our first year, on average, we've traded above NAV. Obviously, we need to keep delivering the business plan over time and keep growing the asset base and delivering our afforestation schemes and capturing more voluntary carbon units. Obviously, looking at the timber cycle at the moment, and timber prices in the UK have been softer. But yeah, I mean, I think the investment trusts who went before us potentially didn't have such a run of it and have set some conceptions that we intend to try and disprove.
In between. We have one here from Stuart Wright. Given that the price achievable for mature timber is key for commercial forest valuations, how does the panel view the 2023 and beyond price trend per tonne, especially for softwood?
Suppose I better try to answer that. Well, my personal view on timber is that if you started post-war, when timber prices were very high, and anecdotally you could buy a farm for the price of the timber in the hedgerows, I think timber has steadily fallen since then. So through most of my working life, the trend has been steadily downwards with good times and bad times, but the general trend was getting lower, and the bottom was about 20 years ago. And then it started picking up again, and we're now on an upward trend, which will, as before, have peaks and troughs, and at the moment we're in a trough. But that will only last as long as this present recession is running. And it may not even last as long as the recession, because I think the supply of the raw material will be limited. It is limited. There's a global maximum, and we import a huge amount of it. We're the second behind China as an importing nation, and the pound has got weaker. So I think for UK homegrown timber, the price future is positive. Exactly how and when that will happen, I can't tell you, but I wouldn't be worried if I had some timber growing on the hoof at the moment.
If I can just supplement that, Fanning, you're right in terms of, general upward trend at the moment, and this is a bit of a trough, but let's put that trough into perspective. Prices today for saw logs in the UK market are still above the prices that we were seeing in 2016, 2017, even though we have seen them come off significantly from the real highs of the last sort of two years, 18 months to 2 years. So that whilst it is, yes, it's a slight softening in the market, it's nothing like a crash of timber prices. It's still significantly higher than it's been in the sort of past 3 to 5 years. Okay.
Too many responses to one question. It's the most important number is the timber price, and as we look forward, it's a commodity, so it's supply and demand. We're expecting increased demand because we're going to use more timber and try and use less steel and concrete because of the lower carbon footprint of timber. And then we also see that the supply of timber, especially in the UK, is going to fall because we're starting to harvest these Sitka factories that were planted perhaps on land that we wouldn't plant these days back in the 60s, 70s, and 80s. And as a result, what we're putting back is perhaps a bit more diverse, or in some cases, not even timber. So there's a lot of long-term support for that timber price, and it's always going to have ups and downs along the way. But I think what Gavin points out, that we're in a trough right now. The prices, I think the article in the report talks about falling 50% from the peak, but we're still above where we were a few years ago. And that gives you an idea of just how strong the kind of trend has been that Fanning mentioned over the past 20 years of improving timber prices.
Perhaps the panelists might comment on energy and renewable energy and how that interacts with the sustainable the objectives we've been talking about. So, for example, hydro was mentioned. Somebody had taken over an existing project. My impression is that hydro is very expensive to install, and the environmental, actually making that compatible with environmental considerations is quite a nightmare, but it'd just be interesting, any comments on that. Wind farms and solar can be controversial with local communities. Interesting in comments on that, although to my mind they're actually very compatible with some of the other objectives we talked about. You can have cattle, sheep grazing underneath them and so on, whatever. But given that energy prices are high and likely to remain so, that just seems a very powerful commercial way, while of course to the extent that it's renewable energy, that fits very much with the whole tenor of the discussion. So be interesting to hear more about that from the panelists.
I mean, we look across our portfolio, and I think where there's high wind resource, and particularly going back, say 10 years ago or more, when the onshore wind was really getting into its strides, I think the best sites with the grid connections have already been snapped up, and probably trees have been taken down. There's been compensation payments and restocking elsewhere to offset those sorts of things. So I think in our portfolio, we do have high wind resource there, and we do get lots of people coming to talk to us about it. Luckily, it's in the upland part of your site where the trees are less productive than normally where you can put turbines in. Turbine heights are getting higher, they're getting bigger. They're less bothered by having trees interrupting the wind resource just because they're higher up, simple physics. So there is opportunity out there in forestry. I think the planning regulation is often a sticking point for these larger turbine sizes that don't need the subsidies. But there's opportunity there, and I think government are clearly keen, depends what week it is, but it seems that government's keen to support onshore wind production with bigger turbines. So if the planning regulation can be sensitively moved to let those happen, I think we will see more projects. But the biggest barrier I see is grid. We've got the resource, we've got places where we can put turbines that don't really interfere with timber production and other natural capital things. We can integrate it very well, but the grid needs to catch up.
As well. So I think of course, solar is not compatible with forestry on the same land. Of course, they're trying to harvest the same resources, the sunlight. But there has been amendments to the biodiversity net gain methodology, for example, to allow for solar farms. So there may be a market there around biodiversity and biodiversity credits. It really depends on what you're starting with. But if it's very marginal agricultural land, for example, then you could see an uplift to pair with the solar, for example.
Okay.
Good morning, Ross Murray. I'm a forestry investor in Wales and Scotland, and I'm also, for what it's worth, a recently appointed forestry commissioner in England. Can I take you back, Gavin, Fenning and Zander, to your point about timber values? The most compelling graph, which you didn't show, is the one of total UK timber production over the next 40 years, and that's a cliff face that comes in the late 2030s. And for forestry investors, whether private or institutional, policymakers or reluctant farmers, I think that is the one to show, to demonstrate, that your thesis, Fenning, about land value being sustained under tree planting. Can I just test Robert on a point about social license, which I thought was a very good phrase and very well-made point. You've obviously hit some resistance in the Welsh farming community or in the local community as regards planting. A lot of it misplaced, in my view. And I just wonder whether there is a tactic which the whole industry can use over land use, which is to go back to promoting long leases so that you persuade farmers that they're not giving up their birthright. Their family will still own the land, but they just happen to lease it for 2 rotations, so 80, 100 years. Is that possibly a way of persuading more farmers to stop growing sheep?
Yeah, so we look at lease structures. We've looked into that recently, and thinking about debt products as well. So, the grants are quite healthy for forestry, and yet we don't get enough planting. So there's a funding gap. And I think from a landscape perspective that farmers are looking at the moment, and there will be sellers of freehold whose children don't want to inherit and go into quite an uncertain farming market in the future. But I do think as investment funds and other investors are proving concept, and landowners who have capital successfully develop timber in combination with voluntary carbon, and see, because I think the biggest barrier is the weight, for the thinning revenue, and it's 35 years before you can get clear fell income. And I think a lot of farmers look at that funding gap at the beginning, and then they look at the relatively long wait time before they get cash flow. So I think if we can prove, I think voluntary carbon could be the game changer there, because it could give you an earlier income stream. And so I think debt funding and also lease finance or long lease structures could emerge. But I think at At the moment, it's mainly freehold-based investment that we see as where our investors are ready for that. But that doesn't mean if we can start scaling up and rolling out, that doesn't mean that there can't be competition and also funding and things that allow farmers to do joint ventures and use debt funding, and we'd encourage that.
Are we not talking about irreversible land use change? So if you afforest, you can't just deforest and go back to sheep. So if we lease the land, we can't necessarily give them back a sheep farm after the rotations. Is that right?
Correct.
That must be right. But the reluctance often with a very small C conservative farming community in the uplands is the idea that they've sold at 2022 prices and that their children in 10 years' time will think that the old boy's been a fool. And to a certain extent, you insure against that by saying there's an upside that they will inherit a forest in 70, 80 years' time, and at least that there will be a reversionary value to them. I don't ever foresee that planted land, frankly, is going to go back to sheep farming. I think it's a one-way bet.
I mean, they could diversify some of their income into one of your funds, could they not? If they wanted to hedge themselves against the values of the forest versus the value of the farm that they've sold?
We'd be delighted.
I think the fundamental problem with leasing is that anything you set down today falls victim to changes in the future. And most of my experience with forestry leases has come from problems that are now faced that weren't perceived when the lease was started. And increasingly the investors want to own the land because the land is fundamental to every change we've talked about. Wind farms weren't really a feature, and yet people who owned the land benefited hugely. If it was just a lease, who would have benefited? That negotiation would have been quite protracted and difficult. And so I think the lease, it has a place, but mostly between related parties. In the open market, I haven't seen it being a great success.
I think the other thing to think about also is let's get the debate into some sort of context. If we hit our woodland creation targets annually, we're only going to be increasing the woodland cover by 0.01%. So we're not talking about mass removals of farming land, even if we hit those targets, and we're not hitting those yet. So I think it's a debate that I think it was yourself, Robert, you talked about that social license, that education of what forestry is trying to achieve. I think that's actually a challenge for us in the industry to pick up and to set the woodland creation targets in context, but also to explain why that is. We heard today about the multi-benefits that you have from woodlands. It's not binary, it's not just for timber, it is for biodiversity, it is for social inclusion. And I don't think as an industry yet we've done enough to sell that story to people. And that's why I think communities do feel a little bit under threat by what's happening.
What is the average timber price per tonne of softwood at present?
Okay, so would you like me to pick that one up? As part of the supply chain into our BSW mills, I can only really speak to the price of log prices. So they've fallen from the sort of high of a little bit over £100 per tonne delivered into mills, down to around about £70 to £75 is where they are currently. We are now starting to see from some of the traded small roundwood prices, because of the lack of activity in sawmilling, therefore less co-products available on the market, the increase in demand for timber for biomass, certainly in Europe as well, that small roundwood price, that industrial roundwood price is starting to rise sort of into the mid-60s, almost to the sort of £70. So that price differential in the timber is really starting to narrow now. But as we've said before, that sort of cyclical nature of the timber markets, it wouldn't surprise me if we start to see sawn timber demand start to rise through next year.
That's the the price at the mill gate. There's a person with a lorry and a person with a harvester who sit between you as a forest owner and that price. So, if you have a really great property that's not too steep and not too far away from the mill, then you want to take at least 15 or 20 pounds off that number for the number that someone's going to buy your actual trees from you for.
Just one thing to add to that, in terms of timber owners and strategy in the UK market, where we're a big importer. Unless you're beholden to a yield target or you need cash flow, the way we look at maximising value from timberland assets in the UK is that when the market isn't as strong, or when it experiences what we've had this year with the storm Arwen volumes coming in and a slight change in market dynamics, you can put some of your harvesting program on hold, which we have done during 2022, and you can leave the value growing on the stump and bring your timber to market next year after. And so that's what we like about timber. If you've got capital and cash flow isn't a major issue, you can play the markets because we're a net importer. And that's what we observe as Foresight, having looked at the market. How have people made money out of investing in forestry? It's about playing the market and bringing your timber to market at the right time, and using that biological growth to generate outperformance and to beat inflation.
And to give a little context, one of the previous points, the reason we've got this cliff of supply is because we didn't do much planting in the 90s and 2000s. So there's going to come a kind of big supply-demand imbalance that, assuming your trees aren't blowing over already, you can kind of push out into that, because otherwise we're just going to be importing at that point.
From SLM Partners again. So this is a question for all of the panelists. You reported a sort of sharp increase in forestry land prices. What does that tell you about investors, discount rates and timber price assumptions that investors are using? Is there any difference between the discount rates and timber prices people are using to value unplanted versus unplanted land versus existing mature, semi-mature woodland?
Take that as an investor, or do you want me to talk about a pretend investor?
You go ahead, Simon.
So I think what I would say about timber prices is you don't need to be putting timber prices into your model that are multiples of what we've seen in the past. If you take the peaks that we saw through the COVID period that Gavin mentioned, you're getting to reasonable returns at these current prices. So you don't have to be mega aggressive. Obviously, there are market participants who are thinking longer term. There's also market participants who are thinking, hey, this is going to come in cycles and we don't want to be buying at the top of those cycles. In terms of discount rates, this is a conversation that we've had because we're not seeing a huge impact in the market from the changing Bank of England base rate. And obviously, Robert had quite a sophisticated discussion about cost of capital, and the risk-free rate is the foundation for all of that. And we can only imagine that eventually comes through, but there's not much debt in our system. It's not typical that people are buying these assets with debt. And there's also a huge amount of momentum that we've talked about in all of the conversations so far. So I'll leave Robert to take the kind of sophisticated discussion of discount rates, but we're kind of surprised almost not to see more of an impact of that. And obviously, if you said, hey, my discount rate's going up, but my timber price is also going up, then you could still justify paying the same price for the asset. And finally, there's a supply-demand scenario here that if you either want to or have to commit capital into the UK forestry market, then there just aren't a huge number of assets on sale right now, and so you're getting into competitive situations for the assets that you might want to buy.
So just in terms of the discount rate point, the mini budget and the 40 days after the mini budget, we obviously saw gilt yields going up very, very dramatically, and SONIA rates and debt costs, base rates going up a lot. I think during that has created a shock, and I would expect both buyers and sellers to be more cautious over the next 3 to 6 months as the dust settles. I think those who need to sell will sell, and those who have capital to deploy and cash drag to think about will keep deploying. Premium assets we've seen are still selling for premium prices. There is opportunity, and with disruption, spreads widen. There's opportunity for those with capital to do good, strong deals. There's opportunities for people to keep selling. So I think what I'd observe is we have now sort of normalized back to almost where we were 45 days ago. And people knew that we were coming up for potentially a recessionary environment and a correction. And during the run-up to the last 12, 18 months, we've all known that COVID was going to cost a lot. We've all known that we might be getting into a slightly different market, and yet markets were strong. So probably best to ask the question again in 6 months. But we have seen things stabilize. But after that shock, the market has opened up. Whether it then closes up and goes back off as it was, we'll need to wait, and time will tell.
Just to follow up on that, you reported sharp increases in forestry land values. So maybe looking back a little bit to before the mini budget and bond yields increasing and so on. So looking back a little bit, do the data on forestry prices suggest that discount rates are going down, or that people are being more generous with their timber price assumptions? I mean, have you done the analysis on your price data to show what discount rates are?
Depends how far back you want to go. Over the last decade, we've had a huge amount of yield compression, and you can't go any lower than it got. And we must, by definition, head towards some form of yield dilation. But what effect that will have depends on how you now predict the future for the crop you've either bought or are about to plant. And if we look ahead to timber prices, people take different views on where they think that will go. And people have different views on these other assets which are now becoming valuable, like carbon or natural capital. Now, as I understand it, we can't have carbon on existing woods, which always seems a bit of a mistake. But I see no reason why you couldn't have natural capital by improving your forest with a bit more variety. And therefore, and different people have different objectives. So sitting where I sit in the marketplace, seeing what people pay, and from time to time trying to buy ourselves for clients, how you put these figures together is entirely personal to that particular purchaser or investor. And yes, I think we'll see yield dilation, but I don't think it's going to change a huge amount in terms of value. But I think it will soften. Everything is a bit more cautious. Robert's quite right. We're definitely in a period of caution, but I don't think we're going down in any great crash. That's not the market we're in.
A simple answer to your question on discount rates is because of the impact of the favourable tax treatment of forestry, and also the fact it's a low-risk real asset, the discount rates are pretty low anyway. I don't think that discount rate compression is really on anyone's mind because of where it is. So it's much more likely that the impact is increasing confidence in timber. And anecdotally, or I've heard the term anecdata used by consultants, which I think is hilarious. We are starting to get people coming from the commercial real estate space, seeing the trend towards using more timber and thinking, hey, we want to be involved in the supply chain there.
I just wanted to reiterate what Fanning said as well, because you made the distinction between existing forestry assets and land for new forestry assets, and I think that's an important one because of the carbon element. There's a lot of hedging going on right now because all of the projections for carbon are very favourable into the future. We know that there's a lot of people who are setting net zero targets, and if you add up all of the net zero targets globally and you expect to offset them, that's more than the land that we have available for forestry or for any nature-based solution. So clearly there's a lot of double counting, and I think where you see investors coming into this space who perhaps haven't owned forestry assets before, it's more that sort of interest. There is a lot of hedging going on the current carbon price and the potential future carbon price. So I thought that's a good distinction to make.
Robert, you mentioned the commercial
broadleaf market. Could you or someone else talk a little bit more about the nature, significance and prospects of that segment of the market?
Yeah, well, I think commercial timber, broadleaf commercial timber is, I think, probably under-serviced market in the UK at the moment. And I know there's people doing trials of birch, trying to get it to grow straighter. We've got in our portfolio some smaller industry going on where we're taking stuff out by horse and putting it through wood misers and selling larch at which is a commercial crop. So we are doing bits of that within the portfolio. I think obviously softwood, commercial softwood is the main focus. That's what the mills are designed to take. So I think we see potentially in places where it's harder to plant a lot of commercial crop, you might be looking at your broadleaf and saying, actually, this is a broadleaf scheme. It's about voluntary carbon. It's about nature-based projects. For me, building some commercial broadleaf production into that design is a good idea because you've got some productivity in there, coppicing, if you're doing continuous cover forestry practices. We've got some stands of oak which we're looking at and thinking, actually, can we keep thinning that and have a business? At the moment, my take is it's more of a cottage industry, but as nature-based projects get bigger and people are saying, actually, you can't put spruce there because it's in the Hebrides and that's not the right place to do it, and you might be thinking, well, actually, I don't want to devalue the land. I want to put something productive on there. So that's how we think about it. Perhaps Sven and others have views about the wider market, but certainly we see a future for it, and we would encourage people to think about that if they're doing a broadleaf scheme.
Well, yes, I wouldn't necessarily go anywhere near the Hebrides with broadleaves. But coming south to here, I think broadleaves are totally underrepresented and in many ways unmanaged. There's a huge amount of existing woodland that could be brought into management beneficially, but new planting in the south should include much more in the way of broadleaves, bearing in mind climate change risk, but we must do it. And people enjoy it. It's a much more attractive woodland in many ways for people to recreate in, but it takes more management. We get away with it with Sitka. You just let it grow and it sorts itself out and you harvest it and send it to the mill. It's very cheap and easy. And broadleaves are not. To get a good stand, like the photograph I showed of oak, takes continual, every 2 or 3 years you're in doing a bit. But that bit begins to pay. That's the important thing. I think you've got a question at the back.
Sorry, we can just pass the
We
to
have
the
another
lady in
question
red
on
behind
live
you.
stream. We have a question on live stream from Ben. What do the panel consider are the top 3 risks to commercial forestry values through 2030? Tightening liquidity has impacted all risk assets globally, but does not seem to have hit the UK forestry yet.
Sander?
Changes in government policy, I would say, would be one, and that includes both tax treatment and grant funding. And I'm going to pass to I've taken the easy one off the top. That was deliberate. Anybody else go?
Biggest risk to forestry? I hate to say it, but I suspect we need to be spending more money on research into the movement of insects and other potential damaging species. That's a key one. And so forest research needs properly funded and paid attention to. You know, it doesn't escape foresters' notice that many of the outbreaks of Phytophthora, funnily enough, coincide with places, hotspots for tourists. And we don't do anything about slowing down tourism. And yet you find on a wet day on the west coast that some new Phytophthora has been appeared, and wasn't there a sailing regatta that brought a lot of boats up from the south coast? So you've got an outbreak in Devon and Cornwall, and you suddenly got a lot of sailors coming from Devon and Cornwall to Argyll, and lo and behold, we've got the same outbreak in Argyll. So these sort of mass vector systems, and again it comes back to responsibility and the fact that we've all become a little bit entitled. So it's a big social change.
Becky, do you have a third?
Oh, mine.
Sorry.
I've probably got a third, which is perhaps a little out there, but if there was any great progress in industrial carbon sequestration, and it's being worked on, but right now it's actually way more expensive to sequester carbon using a machine than it is using a tree. And the challenges of that are, we think about the carbon parts per million in the atmosphere. It's fractions of a percent. It's really small. So it's actually very inefficient just to sit a machine out there collecting carbon from the atmosphere. And so actually where you'd put it would be a chimney where there's lots of carbon coming out of some kind of industrial process. If suddenly someone made a huge breakthrough on that and we could just decarbonize the economy without the use of trees, then perhaps that blunts the demand for timber. We can go back to using steel and concrete. But at the moment, just peppering lots of trees all over the place and let them do the heavy lifting is actually a very kind of financially efficient way of sequestering carbon. But as Becky said, it's not the only solution. If we had trees on every single square inch of land in the world, we still wouldn't sequester enough carbon to solve the problem. So the way I see it is it's going to be a component of whatever the landscape develops to being, and perhaps there's expensive use cases that you need to put on the unavoidable emissions that you need for concrete foundations still under a timber building. And so I'm kind of trying to sell that as an upside rather than a risk, but it's one of these factors that we should certainly keep an eye on.
I think I would say that one of the risks is a risk of missed opportunity. We're not hitting our woodland creation targets at the moment, and the risk we've got is that social license that we've discussed before, and that how we present this industry. We have a really good environment and investment story and social inclusion story to be told, but we're not telling it well enough at the moment, and therefore we are pushing against headwinds around woodland creation. So for me, that's one of the big risks in UK forestry at the moment, is the risk of missed opportunity.
Because I think Fenning's exactly right that pests and pathogens are a real risk even to 2030. But that has a knock-on impact as well, which is planting stock. So if we think about, we increasingly want to have more broadleaf forests, but we don't want to import that stock from abroad and from Europe, then we want it homegrown because of the regulations around plant safety and plant health. Then we need to be growing those now. And actually, sort of anecdotally from sort of local authorities who are trying to pursue their own planting plans, they simply cannot find the planting stock to do it that's appropriate for that region. And if they can't find it, then how are we going to meet these targets? So I think that's another risk that I would highlight, which is sort of linked to the pests and pathogens.
We as an industry don't do a good enough job of showing why we plant the commercial forests that Fenning talked about in his presentation, that we are farming trees because it's the most cost-effective and efficient way of producing the timber that we need, as opposed to importing it. And I do think, as Gavin points out, there's a risk that the kind of big public drive for more trees does not manifest itself in a productive and fit-for-purpose timber industry in the UK.
You waited very patiently.
Firstly, thank you very much for this morning. It was very interesting. I'm just interested to know, because given the carbon sequestration curve of the trees obviously peaks around the 15 to 20 year mark, how can leveraging woodland for both carbon credits and timber operations sit together? Would you have to wait until the 100-year mark when the sequestration starts to peter off, or could you do it throughout its lifetime?
I'll start, and I think others probably want to come in as well. I think it is a balance, and I think it comes down to exactly the choices is about that balance that you want to strike. So for the Woodland Carbon Code, we sort of think about it in 5-year intervals. So yes, your maximum sequestration rate is around that sort of youngish 15-20, although it depends on the species that you're growing. But you will continue to sequester after that point. I think and this is where Robert might want to come in, the profile of return, it depends on the species mix that you've got. It also depends on the kind of risk that you want to take on and the risk profile. So we were talking about pests and pathogens, for example. A lot of the foresters that we've been working with prefer a shorter rotation simply because the risk to those trees is smaller over that time period. So yeah, you'll have a little bit less carbon, the timber will be more valuable, and the risk profile in general is reduced that way. So that's not an answer to your question, but it's just to say that there are these trade-offs, and I think it's specific to your location and your species mix. It's exactly what that balance is.
Woodland carbon code nuance, me or you?
So yeah, just to add onto that, when we're looking at voluntary carbon units, the Woodland Carbon Code, and it depends on the soil and the yield class, but very roughly speaking, decent broadleaf area will be awarded something like twice the amount of pending issuance units as a commercial Sitka spruce area. So there is recognition that broadleafs over the long term will sequester more carbon. You get more units to recognise that. There is recognition that there's thinning and clear felling going on in commercial forestry if that's the regime that you're going down. A lot of people have said, actually, why don't you grow spruce and let it grow? The value of timber the value of carbon might mean that you're better off leaving it growing. Obviously, where that plays out, I don't know. But when we're looking at those, if you want to get to net zero for carbon perspective, you want to be net zero by 2030 or net zero by 2040 under a science-based target, that final 10%. If you're going to use broadleafs, pending issuance units, you're not going to make it. They're not going to grow quickly enough. You won't get those verification points that Becky was talking about at year 5. They're not going to produce as much verified carbon that you can then use for your offsetting purposes. If your goal is carbon net zero quickly, using some commercial forestry in your design is probably the best hedge. So the way we think about it is integrating a bit of everything into our design. So we have some broadleaf, we have some commercial forestry, we have the timber income stream. But funnily enough, PIUs at the moment with perceived nature benefits, biodiversity benefits, are trading at huge premiums to PIUs for commercial forestry. Now, that tells you that the buyers really value nature positive, they really value biodiversity. I guess the question I would challenge is, do they really understand the verification profile and the vintages of carbon and the volumes that we're basing that on? The volumes of units traded in the UK are pretty small at the moment, so the data set's very thin. So I think time will tell as that market evolves whether people want to get to net zero carbon quickly or whether they I think they'll want both. But that market needs to evolve. And the biggest challenge we've got with voluntary carbon is supply. There's just not enough units to meet the demand at the moment.
I think it's quite interesting. There's a little difference between the voluntary carbon units and the way that they perceive commercial forestry. And the recent research published by UK Forest Research, which says pretty clearly that if you want to plant for carbon sequestration, you plant Sitka spruce in the UK. Because of the speed of growth, because of the speed of sequestration, and because of its ongoing use within construction. So that's very much at odds with the way that the voluntary carbon code has gone at the moment. So we still have challenges, I think, within the way that we look at these emerging markets and voluntary markets. Okay.
I did that question a little differently, which was if you're going to sequester carbon and you're going to harvest the timber, how is that dealt with? So you put all the details of your species and what you're going to do with the harvesting into a spreadsheet, and the Woodland Carbon Code spits out a number for how much carbon you're going to sequester. So if you're going to just plant broadleaves and leave them there, what will happen is they'll sequester a bunch of carbon and then it will kind of tail off and it'll reach a steady state. Whereas if you're saying I'm going to plant commercial conifer, it assumes that you grow them until some clear fell date, and then half of that effectively just gets thrown away. It's assumed it's burned as biomass or something like that, and half stays as a durable, in a building or in a table or something. And that was what Robert was noting about why you get so much more from the broadleaves than you do from the commercial conifer. But as Gavin pointed out, the government's own research suggests that the best way of sequestering carbon on a given patch of land is to grow some fast-growing conifer, harvest it, make something out of it, and then grow more conifer on that same land again. And over time, you will continue to sequester carbon rather than just reaching this steady state. So there's a disconnect between what we do and what the research says and what you actually get in these in your carbon units.
I think that's right. The principle of permanence is really important for voluntary carbon. And the theory of why you get a carbon unit full stop for commercial forestry is you grow it for 35 years, you clear fell it, you turn it into logs, and they end up going into buildings and locking up that carbon for a period of time. You've restocked the land. And during that period, whilst the timber is being used in buildings and for flooring and cross-laminated timber and all these products that we have, the trees are re-sequestering the carbon again over that 100-year time frame. So it is considered permanent carbon sequestration. But that filters back to what we use our wood for. And one of the big risks that I see, answering the previous question, is the waste hierarchy and what we use our wood for. If we use it in buildings, we do have embodied carbon locked up in buildings for the long term. Biomass is very controversial. And I think that's something we need to do as an industry, is just encourage the waste hierarchy to be followed, which means that that permanence will stand and the value of those carbon units won't be degraded.
And also push for that to be recognised in the carbon markets, because of course, at the moment the Woodland Carbon Code doesn't really explicitly or not well enough take into account the end use of the timber. So it's measuring how much carbon is in the standing stock of that living forest, and we're sort of assuming an end use, but it's not actually giving you any credit for that particular end use. Other sort of international voluntary carbon standards do, under Vera and Gold Standard, but the Woodland Carbon Code doesn't.
We have one more from livestream.
Unfortunately, this is the last one we can take, so if anyone has got extra questions to ask the panel afterwards, you can do it over lunch. This one here is from Diraj Shah. Commercial capital is out of one's estate with regard to inheritance tax. Once forestry is sold, how can the fund be invested without any inheritance tax implication?
I missed part of that question, a very important bit at the start, I think. I'm probably going to answer it with, I'm not a tax advisor, but could you repeat the question for us, please, Georgina?
Commercial capital out of one's estate with regard to inheritance tax. Once forestry is sold, how can the fund be invested without any inheritance tax implication?
Yes, I am going to answer that with I'm not a tax advisor.
If they already own forestry and they've sold it, they can reinvest in forestry. There's still a forestry business. I'm not quite sure the question gives us enough information.
It sounded kind of like that to me, that if someone has, let's say in a fantasy alternative universe, my grandfather owned a big forest and died, and then I inherited the forest. His estate has not paid capital gains tax or inheritance tax on that forest, and then I now own it. And so presumably the question is, if I now sell the forest, can I then reinvest it in something that has similar inheritance tax benefits? And the obvious answer, as Fenning put, was keep it as forestry.
Why sell it?
Yeah.
It's the other question. You've got just the right asset for the future.
Your first answer to that, we're not tax advisors, is probably the right answer to that.
That is actually, so the best resource for that is the industry association CON4 have on their website a tax hotline where you can call for free a tax advisor who's a qualified tax advisor and get answers to those types of questions. So that's usually where we like to send people.
Okay, I'm being told we've got time for one more in the room.
Hi, I'm just learning about forestry, so forgive me if this question's kind of been answered. But I was just wondering about what impact climate change is having on tree growth at the moment and what impact it's predicted to have. Obviously, that wouldn't be a reason not to invest, because investing in itself kind of tackles climate change, but if you could speak about that, that'd be great.
Someone with a PhD in forest ecology on the panel.
So I think there's no single answer for the whole of the country, but I'd say there's different drivers here. So one is about, you said growth rates. We're expecting that the climate in the UK will change. Some areas will get drier, some will get wetter. So what was planted and what was considered to be a good variety when it was planted, let's say 20 years ago, might no longer be suitable in a particular location under climate change. That is true. So under those situations, you might expect growth to decline. However, there are some situations where we would expect some species to do even better under climate change, and that we would expect stronger growth rates. Now, the advice from Forestry Research is that they have a tool on their website that looks at projected climate change across the country. So for your particular location where your asset is, what is the likely climate going to be in, say, 20, 30, 50 years' time? And then they'll match an area in Europe that has a very similar climate now, so a similar sort of climate envelope, so in terms of its precipitation and its temperature through the year and so on and so on. And their advice is then to source varieties from those locations, knowing that they will be well suited. So it's not necessarily a species choice, but rather a provenance choice. And I think that's what we find from the models as well. So overall, we don't expect sort of productivity to go down necessarily in 50 years' time, but the choice of provenance and the choice of species will have to change in order to maintain that productivity. That helps.
Well, and if I might, just a little bit of shameless plugging here. Within the BSW group, we obviously have our forest nurseries, and we invest a lot into research into the future species and provenances that we would need to combat climate change. An open invitation to those of you in the room to come and see what we do at the nurseries in Bronnington in North Wales, so that you can get an understanding of what we as a group are doing in terms of facing the future. Okay. So I think that's all we have time for on the Q&A session. I hope you found that really informative. I think the presentations today have given us a really good sense of the opportunities in forestry, both existing forestry and woodland creation, but also of the sort of environmental services that fit in around that, and how that's developing as a new revenue stream within the industry. I think certainly, Becky, some of the information that you've given us has given me food for thought about how my managers can best use that. So I hope you found that very useful. As we leave for lunch, I'd like my colleague Sarah and Georgina will be handing out copies of the Forest Market Report for you to take away with you. And there will be also available on our website, on both Goldcrest and Tilhill's website in digital format. But thank you very much for your attendance today. Hope you enjoyed the lunch.